Crypto took a hit today. Both Bitcoin and Ethereum are down, and the whole market has been under pressure. The big reason is options contracts. Those are bets traders make on price, are about to expire, and that always adds stress and volatility. At the same time, the wider economy is shaky, with people worried about inflation data and even the chance of a US government shutdown. Bitcoin tried to climb back up but failed to break past a big resistance level. Instead, it slipped back down under the 112,000 mark. Ethereum also slid, falling below $4,000, which is its lowest in nearly 2 months. This drop comes right before more than $20 billion worth of options contracts expire. When that happens, some traders are forced to sell, and the pressure can ripple through the whole market. Other coins were also dragged down. XRP and many altcoins lost ground. But interestingly, tokenized stocks on Ethereum, basically stock-like assets built on blockchain, are growing fast. Their total value hit over $270 million this month. That's one of the few bright spots in today's downturn. Meanwhile, meme coins and pre-sales are keeping hype alive. Dogecoin saw a fresh wave of institutional attention, and that sparked momentum for other meme-style projects like Maxi Doge and ThumbsUp. On top of that, Bitwise chief investment officer made headlines by predicting Bitcoin could hit $200,000 in the future. That kind of bold call fueled more excitement around pre-sales, especially one nicknamed Bitcoin Hyper. Communities on X, the platform formerly known as Twitter, have also been rallying around quirky tokens like one called Lesser, building hype through branding and community buzz. New pre-sale tokens are also getting a lot of attention. Some investors are hyping Alpha Pepe and Layerbret as early opportunities with big return potential, even though the overall market is weak right now. Others are chasing breakout moments, like one token on Solana called Tokyo, that rocketed from under $3,000 in value to over $450,000, a crazy 157 times gain. These stories show that even when the main market is red, small projects can still pump hard. DeFi projects are also making noise. One platform called VOI is trying to fix common problems traders face by offering unified balances, gasless trades, and advanced tools that feel like centralized exchanges but run on decentralized systems like Orderly Network and Hyperliquid. That's the kind of innovation people are watching as DeFi continues to grow. The community side of crypto is as wild as ever. On X, people are bragging about turning one Solana coin into millions on a project called Aster. These kinds of stories fuel the idea that life-changing money is still possible in crypto, but they also highlight just how risky it all is. Some polls online also show that even in the middle of this downturn, lots of people are sticking with dollar cost averaging. That's the strategy of buying small amounts regularly no matter the price. It shows that faith in crypto isn't gone. And it's not just crypto in its own bubble. Traditional markets are also in the spotlight. HSBC, one of the world's biggest banks, predicted that the S&P 500, a major U.S. stock index, could rally by 20% to reach 7,000 points by the end of the year. If that happens, it could bring a wave of optimism that spills over into crypto. After all, when stock markets are strong, some of that confidence often flows into riskier assets like Bitcoin and Ethereum. So what does all this mean for the average person? The short version is, the crypto market is shaky right now. Prices are under pressure, mostly because of expiring contracts and economic uncertainty. But beneath that there's still energy. Meme coins, pre-sales, and DeFi projects are buzzing. Tokenized stocks are growing. And big institutions are still making bold predictions about Bitcoin's future. The big picture is mixed. On one hand, short-term stress is pulling prices down. On the other hand, long-term optimism is alive, fueled by innovation, hype, and bold bets on the future. For everyday people, it's a reminder to be cautious. The opportunities are real, but so are the risks.